and it's really an informational and a risk absorption issue. Well, guess what? We have solutions globally to do that in other markets, right? In the United States, if you want to get a larger mortgage, we have what's called private mortgage insurance. $300 to $500 billion a year of coverage, massive market. Why can't we come up with a solution that replicates that type of risk coverage with modern technology and capital backing? And so the thing that made it too big to ignore was the combination of size, in the ability to replicate what's already really worked in other markets in a new packaging for this quite sizable market niche. Again, I think the how to do it, the smartest and quickest path is through partnerships. I mean, you can plug into tools today that'll help you do that and tie up with a private credit fund or an insurance company or somebody like else that'll help you marry the capital and the technology, and you're off to the races. So I think that would be my advice, and focus on what you do great, right? Which is maintaining the customer and doing all the other products to them outside of this.
Welcome back to the Enhanced AI Partners podcast, the show where we explore how leaders are scaling in fast-changing industries through people, process, and pragmatic AI. I'm Johan Mejia, founder of Enhanced AI Partners. At Enhance, we help fintech and SaaS leaders scale smarter using AI-powered content, outbound systems, and workflow automation to drive growth without adding headcount. This podcast is where those lessons come to life by talking with builders and innovators shaping how finance, technology, and global business evolve. Today, we're diving into the future of cross-border home ownership, credit, infrastructure, and trust. My guest is Charlie Connor, founder of OpenCastle.io. Charlie and his team are rethinking what it means to buy and own property across borders, blending a B2B2C model that connects banks, brokers, and end users while tackling the challenge of open banking, digital infrastructure, and cross-border credit portability. We'll explore how this model benefits the entire ecosystem, what technology gaps still need solving, and how the future of global credit and financial portability might change the way people own homes worldwide. Charlie, welcome to the show.
Thank you. Great to be here. Appreciate
it. Yeah, we'll go ahead and get started with the first segment where we'll explore the founder journey and OpenCastle's vision. So, Charlie, what led you to start OpenCastle? Was there a personal or market moment that sparked that idea?
Yeah, I think it was a little bit of the convergence of those two things. So this was kind of a solve your own pain point type of issue. So long story short, I spent about 10, 12 years in Brazil building first a growth equity fund and then one of Brazil's largest log tech fintech companies. And at the beginning of middle of 2023, I left, and my wife and I decided to take a sabbatical. Travel the world, spend some time with the kids, always keeping an eye out for opportunities. And towards the end of that sabbatical, that journey, my wife started to say, wouldn't it be neat to buy a home in Southern Europe and maybe think about, living somewhere else? And so I dug into that process a little bit. It's something I never really looked at. And when I did, I was really kind of blown away by a couple things. Number one, I thought we were, this creative couple doing something adventurous. And I was just blown away by the number of Americans and Europeans, aggressively deciding to live abroad, acquire real estate abroad, spend a large part of their time abroad. And so this market that I had never heard of, it turns out is, well over 100 billion if you just look at the US and EU combined. Probably something on the order of magnitude of 200 billion globally. That's the amount of real estate being bought by people outside of their home country. So I kind of thought, that's really odd, and started to dig into it. And the more I dug into it, the more a couple things jumped off the page and really made it interesting. Number one, it was a huge market. Number two, generally speaking, the types of people that go on this journey and want to buy real estate somewhere else are generally a really positively self-selected credit profile. These are people with assets and income. But number three, they were partially shut out of traditional mortgage solutions. So generally speaking, what would happen is, I'm American, I want to buy a piece of property in Italy, as many people do. A lot of banks just won't deal with me. And the banks that do will significantly haircut the amount of money they can give me. They'll kind of say, Charlie, you look great on paper, but we don't really understand how to read your credit file, number one. And even if we did, you could always just go back home. And so whereas we would give the native, whatever, 500,000 loan, we're going to give you 300,000, 250,000. So a lot of people, when hearing that, either say, no thanks, I'm out, and their journey ends there, or they seek some pretty high friction, high cost solutions to be able to fill that gap. And so when I looked at that, I said, okay, massive market, positively self-selected credit, which is really interesting in the credit world. Usually you can find big markets that are untapped that are high risk, or really low risk ones that aren't that big. This was kind of the perfect marriage of those two. And we were at a moment in time where the technology was allowing us to do a lot of things we couldn't do 5 or 10 years ago in terms of cross-border, real-time cross-border credit analysis and the like. And so I looked at all that and thought, there's just a ton of value to be created for the whole ecosystem, borrowers, banks, brokers, if we can figure out a way to get these good borrowers, to get them treated like natives wherever they go, give them portability for their credit worthiness, if you will. And so that's what we're focused on in OpenCastle, helping non-residents get the same treatment abroad that they would get back home when they walk into a bank or apply for a financial services product.
Wow, that's fascinating. And if you had to explain OpenCastle's mission in one line, what would it be?
I'd say it's unlocking credit globally. Our objective is to make sure you get treated abroad the same way you get treated at home in your home country when it comes to seeking a loan. And so that's the great unlock we're going after. The initial focus is, again, non-resident home buyers, but over time, this concept of unlocking credit globally, we think has a lot more niches and verticals that you can build into once you've proven out the model. So not just home buying, but consumer lending, even small business lending. There's just a ton of opportunity for people that are living, operating, doing business globally to unlock and untap credit if you put together the right analytical tech stack and the right capital support to allow banks to be able to unlock that credit for them.
That's pretty powerful. And is there something in particular that made this problem impossible to ignore?
Impossible to ignore from our perspective?
Yeah.
Yeah, I would say just the size and the scope of this thing, the type of opportunity. I was an investor for many years, and then I ran some companies where we launched log tech products, fintech products, and for different things. And I'm really compelled to markets that are not only large, but where you can kind of see the pieces of the puzzle and put together things that already clearly work in a new packaging and scale them on a whole different level. So when we looked at this market, you kind of say, okay, what is really the pain point? Well, the pain point is people should get this much credit and they get this much, and it's really an informational and a risk absorption issue. Well, guess what? We have solutions globally to do that in other markets, right? In the United States, if you want to get a larger mortgage, we have what's called private mortgage insurance. $300 to $500 billion a year of coverage, massive market. Why can't we come up with a solution that replicates that type of risk coverage with modern technology and capital backing? And so the thing that made it too big to ignore was the combination of size and the ability to replicate what's already really worked in other markets in a new packaging for this quite sizable market niche.
Oh, thank you, Charlie. And so that's part of the origin story, but really innovation lives in the model. Let's dig into how OpenCastle is bringing banks, brokers, and users together. So your approach is B2BC. So you're not only serving banks, brokers, but you're also serving the end user. Can you explain what that model looks like in practice?
Yeah. Give me a second. I'll describe the flow so the actors kind of become a little clearer here. But at a very high level, what we think is key is hyper focus. Kind of looking at the ecosystem and having a hyper focus on where we can add just disproportionate value and focus on that, and then let existing partners kind of do the rest, do what they're already doing, quite well. And so when I first started digging into this market and we started looking at it, we kind of said, well, we could build a kind of a digital brokerage bank for a cross-border use, and acquire the customer and process the loan and disperse and servicing. But when we looked at that value chain, we realized, you know what? Banks already do a great job and have the cheapest capital out there of being able to fund a loan. You already have a magnificently deep pool of mortgage brokers and real estate brokers that help find borrowers, explain the market to them, get them a property, and help them talk to that bank. What's really missing is an analytical layer and a capital risk absorption layer that helps those people do more, right? And so we said, why compete with banks and brokers and try to build this full stack when we can really focus laser-like on unlocking more credit in that ecosystem and generate value for those, have those people be our allies as opposed to our business partners as opposed to competition. So if you think about kind of the normal customer journey, let's say you're from the US and you want to buy a beautiful piece of property in Valencia, Spain, and you're going to talk to a broker, a real estate broker. They're going to help you find a property. People do that wonderfully. There's a whole deep ecosystem of that, digital, non-digital. You then want to talk to a broker to understand your financing options. Again, very deep ecosystem of people that do that and do that job very well. They're going to then present you to a bank, and generally where the pain point's going to be is the bank's going to say, well, gee whiz, Johan, we don't know you from Adam, so we're just going to try to haircut you as much as possible, bring the loan down as much as possible, or say no when we shouldn't. So the real pain point there is, nobody's sitting there to understand your risk a little better and take that risk with their own capital. So our model says we work with a bank. We say, okay, Mr. Bank, let us look at your customers. When Johan walks through the door, send us his file. We'll do the underwriting. We built a beautiful credit architecture on top of open banking systems in the US, UK, Brazil. We'll help you understand better Johan's global credit risk, what he owns and what he owes and what he earns globally. And if we okay him, we'll just give you the collateral so you can do, Johan, a larger loan, right? Mm-hmm. And so what happens is brokers close more deals, both real estate brokers and mortgage brokers. Those deals go up in size because the borrower is getting more a larger loan. So they're very happy. Their close rate goes up. Their commission goes up. The bank gets a great customer. I mean, Johan's a phenomenal customer. Usually cross-border clients are. They need all the banking services when they get to a new country. So the bank gets a phenomenally differentiated tool in acquiring Johan. And we get to focus on what we do best, which is the risk analysis and the capital absorption, giving capital support that loan. So if the bank can give you a bigger loan without taking any more risk, we take that risk for them. And so we think that's kind of a win-win model that you can scale really nicely across borders with a lot of technology and little people, as opposed to trying to build out the whole tech stack in a standalone bank and compete with those individuals.
Yeah, that really does paint the picture, and it partially answered the next question of how does each part of the ecosystem benefit? Because you mentioned banks have better underwriting, more global customers, brokers get better, bigger, easier deals in expanded markets, and users get credit portability, access to financing abroad. Is there anything I missed?
No, I think that's right. I mean, just to say it in a slightly different way, and I think you hit it on the head. The user gets the most efficient capital allocation possible, right? I mean, you get the credit you should get at the lowest possible rate and the amount you should get, so you don't have to liquidate assets and go through headaches to get there. Usually that saves you money and it allows you to buy a bigger home, right? Because most Americans and UK people, for example, don't say, I want $1 million home. They say, I have 200,000. What's the size of the home I can get? So we can help them get more credit. We help that. And then you hit the nail on the head with the others. The brokers get more close rate. Interestingly enough, according to the U.S. National Association of Realtors, the number 2 reason an international cross-border deal falls apart in real estate is lack of an appropriate mortgage. So we're really picking dead deals up off the ground and helping brokers get them across the finish line and do business they otherwise wouldn't do. And with the deals they would have done, the average ticket goes up. And so they get more commissions. And as you said, the banks get the best customers. I mean, when you go to a new country, I mean, let's be honest. At this point in life, I don't know how many digital wallets I have and credit cards I have, but it's too many. I do not need a new bank. But if I go to, decide to move tomorrow to Portugal or Spain or Italy or Mexico, I will need banking services there. And so the logical point of entry for the bank to pick me up is that mortgage. So we help them do more business and taking zero incremental risk because we bear all the risk of default in that incremental loan that we're getting them to do.
And where do you see the strongest pull right now? Either banks looking to expand or consumers demanding portability, or both?
Yeah, so it's interesting. I think in B2B2C, I think you'll, especially in financial services, I think you'll probably almost always see the consumer, being way out ahead of the beat, right? For just structural reasons. So if you think about credit broadly speaking, there's always demand for credit. Credit is generally much more of a supply-constrained market than a demand-constrained market, generally speaking, right? And so, if you have a good offer and a fair offer and something that's quick and easy to get, there'll always be demand for it. And then if you look specifically at what we're doing, in other words, trying to get people, the right amount for a house, there's just so many demand markers out there. The United States with PMI has been around for decades, 300 to 600 billion a year of coverage. It's a massive market that indicates the demand's there. U.S. and U.K. and other borrowers are used to 15% down payments when they go to another country. Sometimes it can be as high as 50. The pent-up demand is just there and clear. Yeah. So we've done zero marketing. Haven't talked to consumers, and we have consumers that have somehow found us, and brokers that have found us and said, when can we get up and running? Anytime we describe it. That's kind of the way. So the C is out there. The consumer needs it. It just makes so much economic sense. They've used similar products in other markets. Banks are a different kettle of fish, right? I mean, banks are they need to get comfortable, and rightly so, by the way. They're regulated entities. They need to be very conservative. They need to get comfortable with vendor processes. They need to do their diligence. That takes time, right? And so, the setup, we're about to go live with a bank partner in Southern Europe, and it's been a long conversation, as it should be. The good news is when we set up the product, we basically designed it to take all the objective to getting to yes with the bank is getting all the no's off the table, right? And so we designed it to get all the no's off the table. We don't need to integrate with their core services. We're a standalone process. They don't take any risk. We give them our money, so they don't have counterparty risk with us. It's the other way around. I run their counterparty risk. They don't consume any capital with our product, and so you start off in a conference room with 6 different people that are designed to say no, and by the end of the meeting, there's only 3 left talking about the business, growth opportunity, which is great.
Well, I mean, that does paint the picture, and it's a great breakdown of how the ecosystem works. But, for this vision to work, the infrastructure has to be there. So let's talk about where things stand today. Cross-border credit depends on solid infrastructure. What's the current state of play? Open banking, identity, access keys, how do those play? Take a keys.
So this is going to vary a lot by market with different kind of friction points and moments of development at each. So today we're set up, our first 3 countries we have origin countries and destination countries. So if Johan's in the U.S. and going to Spain, his origin is U.S., his destination is Spain. Most of the data we're looking to get about Johan is going to be from his origin country. Where has he been the last few years? What's his salary? What are his assets, etc. So we're working with U.S., U.K., and Brazil and starting to build for others. I would say U.S., very solid. Just companies like Plaid and Yodlee, Affinity. Pick your. Some of these open banking platforms have across the board penetration with all the major banks and even small ones, just tens of thousands of institutions globally at this point. And consumers have used the product, right? Like if you're 40 or 50 or below, you probably connected at least one account. I don't know the most recent numbers, but when we first had our first conversation with Plaid a year or so ago, I think they had 70 million Americans that already used it, at least once. So there's a high level of penetration. The tools are relatively sophisticated. There's some things you need to fix to get it to scale, but it's working well. When you go to the EU or UK, it's a few years behind. There's a regulatory component to that where they haven't kind of pushed it as much, and so innovation follows that regulation, and so you get less access to data. It's generally just transaction accounts, so I don't really see your full picture, but I can see a part of it. They'll get there. There's some adoption things happening over the next couple of years, some regulatory things that'll push it forward, but I would say they're a little behind the U.S. And then when you look at other markets, on the emerging market side, I've spent many years in Brazil. The pace of innovation is great. So behind the U.S. in terms of market adoption and trust, but the tools are being built. The legislative background is kind of regulatory framework is there. The government wants it to happen and is pushing access forward. Resistance for the banks have partially gone away, mostly gone away, and so it's on that ramp up curve, but it'll take a while. But the good news is the technology is there, right? I mean, and works fairly well, and that's the key issue. That the adoption curves always follow that if the product's good. But that's on the tech side. If you think about actually how much lending that's unlocking, that's a whole different question, right? Because what we found, I'll speak to cross-border. So far, I think most of the case studies you're going to see for that type of open banking infrastructure are on marginal use cases, which doesn't mean to say they're not very big markets or not very interesting markets. They are, but where I've seen them work is a new fintech plugging into these platforms and getting data on a borrower that's basically non-bank today. So think a gig economy employee, right? To be able to look at his cash flows, even though he doesn't yet have a pretty credit score, it drives tremendous value, and you can open up lending to those individuals. But if you think about cross-border, you can give these tools to a bank, and they can look at Johan's credit history in the U.S. now, look at his do a cash flow underwriting, but from the information and data to then actually put their regulatory capital at risk to loan Johan money is a big leap.
Yeah.
And so I think what you're seeing is people starting to use the tools, but their credit committees are still sitting and saying, well, if we still have to take this risk, we're not ready for that yet. And that's kind of the reason, getting back to the business model we developed the way we did, which is we say, okay, we're not only going to give you the tools, but we'll take the risk. We'll take the risk. So you can go ahead and actually speed up your adoption curve because we're going to take that capital absorption. So I'd say the tools are very advanced. Adoption curves vary by country. A lot of work to be done, but the state is pretty strong and innovation is growing. The risk absorption that people are actually acting on that data is still kind of in the periphery of fintech and not yet in mainstream banking in other places.
And you did touch point a little bit on the UK side, but what are the biggest technical or regulatory hurdles right now?
Well, what we see is really the scope. So there are a bunch of things. First of all, if you look at certain markets, they just have different views on what any financial institution should be able to see and monitor, about a consumer, and that's generally more restrictive outside the U.S. I would say right now than it is in the U.S., but it depends on the market we're talking about. On open banking specifically, the regulatory triggers are really, it was originally focused on, okay, all banks have to give access to short period of time, 6 months I believe it is, on the transaction account. They don't voluntary participation on making APIs available to, or OAuths available to investment accounts, brokerage accounts. So again, if you think about unlocking credit for that Uber driver, great. You can see his cash flow perfectly fine in his transaction account. If you think about really developing sophisticated financial services products, a cross-border mortgage, wealth advising, portfolio management, you really need to have your whole financial life connected into open banking and a platform to be able to get all the data. So that I'm not just looking at your rough cash flow for the last 6 months, but rather see what you own, see what you owe. That's going to allow people to do really robust and detailed underwriting and really extend more credit and or help you, seek out better financial services products. And so EU legislation, UK legislation is getting there. I think it's 2026 or 7 where that'll happen, and they'll expand the obligatory access. But it's not there. It's more limited scope today than say the US, where we've had plaid-like access for over a decade now. So.
Oh wow. And are there any lessons from markets that are further ahead, like in the US?
Lessons for whom?
For you guys especially, like lessons learned from doing business in the U.S. and seeing how their technical and regulatory side of things are a little more advanced and ahead than other markets.
Yeah, I think unfortunately there'd be better lessons for policymakers than us sometimes. It gives us great visibility into what you can build and what should exist if the infra is there and the policy allows for the infra to be there. And so, in that sense, yes, it gives us a little bit of peek into the future of what we want to be building in other markets as soon as adoption and the regulatory framework gets there, and gives us that kind of benchmark of what we should have everywhere. And then, frankly, we have to adapt to the local tools in each market. So the way we actually do underwriting, the data feeds we get, the way we analyze it, the way we extract data, look at it, and put it together. Our risk matrix is the same universally. But the way we feed that and analyze that has to be different by every country based on the best tools they have available to get access to data. So what we built on the backbone for US is different than the UK, is different than Brazil, which will be different than some of the EU countries we're looking at. And so it's on us to kind of look at that best class benchmarking and then figure out how to partner with the best folks in each market and live within the reality of what they provide.
I mean, that's amazing. So you're pretty much making like an OpenCastle version for each country and each bank, since each country has its own regulations and infrastructure.
It is. I would say though the good news is we're not recreating by any means the base level tools, right? Again, we look at the ecosystem and look at the US and say, okay, who do we want to partner with? Do we want to partner with Decision Logic? Do we want to partner with Plaid? Do we want to partner with Yodlee? Who gets me the best income analysis? Great, that's my partner. Who gets me the best asset analysis? Great, that's my partner. Who gets me the best AVM to look at the value of the real estate my owner has? Great, that's my partner. And so again, we're standing on the shoulders of giants and other great startups that have built that infra layer incredibly, and that allows us to focus on credit analysis, right? And so we can build pretty expensive coverage with a very small team because that base layer is built. And what we're allowed to do is to build on top of that and not start at sea level, not start at ground level. Be able to start halfway up the mountain.
Can you share an example where infrastructural gaps stalled progress and what needs to happen next to avoid this?
Yeah, I would say, I really think what you're asking is kind of about obstacles to be overcome and gaps. On the tech side, so let's think about that infra layer. I think the biggest unlock in the short term, it's interesting, I think it's a short term one and a long term one. In the short term, I think the biggest unlock is, for lack of a better way to say it, data hygiene. What do I mean by that? If I connect into an open banking player today, I'm going to get down to the penny and down to the date, your transactional data, right, from your account. So again, let's go back to that Uber driver. If I'm a new fintech lender giving you your first loan, and all I need to know is, does he manage his cash okay? Is there more coming in that's going out? That, just seeing that transaction data is all I need. That's great, and I can give you a $500 loan or whatever the case is. If I want to be much more sophisticated in our analysis, and we do, at OpenCastle, I don't only want to know, did you get 10,000 coming into the account? I want to know what if that was salary that I could depend on every month? What if that was investment income, which is choppier? What was a self-transfer? There's a huge amount of work there to be done on making the data labeling, classification, consistent. And that's an enormous unlock because the better and more high quality the categorization, the labeling, the machine learning you can do on top of that to be able to provide to folks like us, it just unlocks value for the whole ecosystem. Otherwise, I have to build it on my end and understand for each different source, what is that? What is that piece of data? What exactly, to what type of transaction is it? So I think the biggest unlock we see on the platform level is probably that data classification and then probably aggregation amongst accounts. Again, we're dealing with sophisticated borrowers. So going back to that gig economy worker, one account, basic look at cash flow, I'm good. If I want to put together a sophisticated cross-border mortgage deal, with instant approval, I need really high-quality data from multiple accounts and be able to aggregate that in a smart way without double counting, without unnecessarily eliminating. So there's a lot of base level data hygiene and machine learning to be done at that level, I'd say, the platforms.
Well, that's pretty crazy and a really good, huge point right there. And I mean, those challenges are real, but they also create massive opportunities. So let's zoom out into the future of cross-border credit and some of the opportunities that you're seeing ahead. So looking into the future, what does a truly portable credit system look like?
I think in simple format, it should be one where your credit worthiness and therefore your access to credit is the same no matter where you choose to live and work, right? If you think about kind of what the 5 C's of credit and what is your bill, your capacity to pay, your character, your collateral, and whether you're going to pay, none of those should depend on where you're coming from and where you're going. And so a truly portable global credit system, I think, is one where credit worthiness and access to credit is the same no matter where you live and no matter where you want to invest or do business. Again, how we get there is a different story. I think there's a massive information data challenge that is the underwriting component, but then there's also execution and capital challenges. So, okay, I know you're a good credit risk, but how can I actually make sure that you've got collateral over there and income over there too? I can go after it if you default, and I can cover my losses if you default. So I think it's a multi-year challenge of not only improving the quality of that data, but improving the quality of banks and lenders to be able to push a button and know they have execution on credit risk and full protection on credit risk.
It's pretty powerful. And how could this reshape cross-border home ownership in the next 5 to 10 years?
Well, I think it expands the market. Just undoubtedly. I mean, I think we definitely have some anti-immigration and anti-globalization headwinds, but despite all that, this market just continues to grow. You have a massive retiree wave in the developed world, predominantly U.S., Europe. All those people are getting to retirement age, and if you're in the U.S., for example, it was a pretty easy decision of what you were going to do. If you had some money a few years ago, you're going to go to Florida, Arizona. Those were your options. Now people look at the real estate prices, the insurance prices, the hurricane risk, and they say, you know what? I could have 2-3 times the quality of life in southern Spain, Portugal, Mexico, Costa Rica, Greece, wherever. And the key unlock for them there is, making that transaction viable on the credit side. So we think it's just a massive unlock of the market size and the depth and sophistication of that market that we think is just going to continue to grow. The more people are mobile in their work and mobile in their retirement, the more this market grows. And we think long term, those numbers are going to continue to go up.
And what role will partnerships with banks, fintechs, and governments play in making this future real? We're getting closer to making that real.
So it's interesting. I would say, again, we obviously believe in the partnership model, and I think some of the most interesting things happening today in credit are actually partnerships between banks and more nimble credit sources, right? So if you think about the last 15 years, there's been a pretty common theme of banks being able to do less and some of that risk having to go into private credit markets, right? That as an asset class has just boomed. And if you think about those two parties, right, what you have is banks still, quote unquote, own the customer. They have phenomenal relationships with the customer, can do cash management, can do payroll, can do FX, a bunch of different things that private credit has no interest in doing and shouldn't be doing. But they're restricting the amount of credit. So you've seen, think about corporate credit. In the last, 6-12 months, you've seen at least a couple $25 billion plus deals inked between Apollo and JPM to do corporate credit together. JPM owns a customer. Apollo can take tranches of that credit risk that JPM can't or doesn't want to take. See the same thing, I believe, with KKR and Citi. So I think across asset classes, you're going to continue to see these partnerships build up where smaller, more nimble platforms like ourselves that can bring in private credit and technology can help a bank scale into that incremental exposure a lot more quickly than them doing it themselves, and allow them to do it in a way that satisfies their creditors, doesn't have them puff up the risk on their balance sheet. And so it's a true win-win. So I think a lot of this is about fomenting those partnerships between technology, private pools of capital, and larger financial institutions that kind of have that customer relationship already.
And if you had to bet which region or corridor, let's say Latin America, Central America, Central Europe, Eastern Europe, will lead in cross-border mortgage innovation?
It's an interesting question. So let me break it down two ways. So the market today isn't tough to think about. You basically have two massive pushes for this type of movement. One is people coming, and this I think has slowed and been a little bit of a victim to the anti-immigration rhetoric, but people looking for better job opportunities in places like the U.S. Right? Mm-hmm. So that market used to be enormous, and it's fallen in the last few years because those doors have been not shut, but certainly squeakier than they used to be, right? Harder to open. The other massive flow that's built up and overshadowed the decline in that market is really people, and I'm going to oversimplify here, but people from wealthy, cold places wanting to be in lower cost of living, more enjoyable, warm places, right? And so market-wise, if you look at the destination, it might as well just be a circle around the equator, right? I mean, it's a lot of Southern Europe, a lot of Mediterranean belt, and a lot of the Caribbean belt, right? Mm-hmm. So it's Portugal, it's Spain, it's Italy, it's Southern France, a little bit of Greece, even Turkey today. Mexico, Costa Rica, and then if you're from Europe, a lot of those people can also look into Southeast Asia now. So Malaysia, huge retirement market, for example, very low cost of living, great quality of life. So I think those are the kind of the natural migration flows. In terms of who's going to own the facilitating platforms, mm-hmm. I think that's probably a little different, right? A lot of what we're talking about on open banking, technology, I think a lot of the base layer is, places like the US and China just have data and compute and the environment, just have such massive access to talent, access to unlimited capital, just have such a massive advantage in building kind of ML foundational models, things that'll power the rest of the ecosystem, right? Kind of building that base level. I think there are emerging markets, think Brazil, think India, that have their own alternative tech stack that they've built, right? Like payments and UPI in India and Pix here and things like that drive innovation in totally different ways that we never would have thought of in the United States. Mm-hmm. And they can build that for a massive homegrown audience, right? So maybe something comes out of that for cross-border that's not on my radar. And I think there'll be a lot of innovation in and around open banking things in niche markets like Africa where there's just no tech stack to speak of. And so you're building it out from whole cloth. I don't know how much of that's going to bleed into cross-border mortgage. Probably very little. But in terms of great tools for microloans, for small business lending, there'll probably be massive innovation in some of those markets that would be interesting to follow as well.
Oh, it's pretty interesting. And now we'll go into that quick fire round. So we'll do 3 questions.
Sure.
And we'll go ahead and get started with the first one. So what's the most underrated lever for improving cross-border credit access?
This is going to sound self-serving and simple, but I do think in the very short term we have so many underutilized tools today that it really is about setting up, those partnerships where big banks are getting access to that data and analysis probably from tech partners that have already built it, and marrying that with capital. I think if you could do those two things like we're trying to do, that's the quickest win. Mm-hmm. Long term, I'm actually quite intrigued by if we really 10 years out, 5 years out, have much of our assets tokenized on the chain. I think that could be a massive unlock as well, because if I know that independent of where my bank is located or my lender is located, I have a digital representation of your assets that I can take, hold, and execute upon. And I just said a lot. There's a lot of infra that needs to be built there, and a lot of manpower needs to be built to do that. But if you can get that done, then you basically look, small businesses, even mid-sized companies, consumers, everybody gets to unlock their collateral on a global basis. I think that's a massive second leg. You need a lot of manpower to get there and build that infra and really get everything on chain tokenized first. And you need some regulatory reform, I think, to be able to make sure that those banks get credit for that. But I think that's the longer term unlock.
Wow, that would be crazy just to think about future that looks like that. And next question is, one thing banks should stop doing when it comes to global lending.
In our categories, I won't speak to global lending because there's a lot of categories where big banks just have a massive competitive advantage to do it very well. Think trade finance, which I've dealt with in the past. I think on the consumer level, small business level, I think it really is, and I hate to say this, it shouldn't come off as a derogatory comment, but don't be complacent. I've been surprised at how few banks have invested in anything on the open banking side in a real way. And I've been surprised, I shouldn't say surprised, they haven't yet really kind of plugged into that data and changed their underwriting. So what generally happens today, and especially in our category, is I'm going to use my cookie cutter approach that worked for my domestic market. I'm going to apply that to you. And because I know it's not the best way to do it, I'm just going to haircut you and give you less credit. That's my catch-all solution. And so I think stopping that complacency, embracing some of these tools, that's the what to do. And again, I think the how to do it, the smartest and quickest path is through partnerships. I mean, you can plug into tools today that'll help you do that and tie up with a private credit fund or an insurance company or somebody like else that'll help you marry the capital and the technology, and you're off to the races. So I think that would be my my advice. And focus on what you do great, right? Which is maintaining the customer and giving all the other products to them outside of this.
And last question, what's one book, podcast, or resource that you'd recommend to first-time founders?
That's interesting. Books are always difficult because I read I read a lot, and my favorite book would change by the week. So podcast, I'll do podcast. I think this may be cliched. You may have a lot of guests that say this, but I really liked Acquired. The Acquired podcast, I think, is phenomenal, and the reason I like it is there's a ton of if you want founder motivation, there's a sea of that out there. If you want like tech, insights, there's a sea of options out there. What I really like about Acquired is I think I personally gain tremendous insights about the businesses I'm working with by being able to deep dive into totally different business models and totally different sectors. There's always something I can draw out of that and say, wow, that's really cool what they thought out there. How can I do that in our go-to-market? How can we do that in our strategy? And I think Acquired just does a great job of just doing 2, 3, 4, 5, 6 hour deep dives into the guts of a business where you come out of it always with some strategic insight. So I would recommend that on the podcast side.
That's really funny because one of our guests earlier this week recommended Acquired as well for his recommended podcast.
Maybe he's on the same referral program I have. Acquired pays me.
But he did recommend the show. He did warn me that, like you said, they're 3-4 hour episodes. But he said the 3 hour, 4 hours.
It's an audible.
Yeah, you wouldn't feel
some
the 3
of them
or
are
4
audibles.
hours. And the first one he recommended was Visa, and I listened to that later that day.
That's an astounding one. They're
It's
very
really
long
long.
ones. Microsoft, NVIDIA, there's some that are like 8 hours long, 6 hours long. The Visa episode I would recommend for absolutely everybody. Like the genius behind that business model and how so many years later it's still just a money-making machine.
And it's still growing.
It's really, there's a lot of insights there.
Yeah. Thank you for sharing, Charlie. And today we explored Charlie's journey and the vision for OpenCastle. We broke down how B2BC model benefits banks, brokers, and users, and we also examined the current state of cross-border infrastructure. We looked ahead to the opportunities in global credit and financial portability, and we got a pretty fascinating window into the future of cross-border home ownership. So, Charlie, we want to thank you. This has been a very powerful conversation, not just about OpenCastle, but about the bigger picture of how credit infrastructure and trust will shape cross-border home ownership and cross-border lending at the end of the day. And for everyone listening, check out opencastle.io. I'll leave the link down below. And to our audience, if you enjoyed this episode, don't forget to subscribe and share it with a colleague. Charlie, thank you again for joining. I can't wait to see how OpenCastle continues shaping this space.
Thank you so much. It's a pleasure, and really appreciate the invite and the time.
Thank you, Charlie.